ringing herald simps and virgins. And thank you so much for the extremely nice birthday wishes.
Isn't that nice?
I don't deserve them because I'm just a little peasant. But welcome back to Krown's magical and also extremely serious Magic Internet Money Game. Pew, 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 pew.
Welcome back to the Krown Crypto channel. And indeed, it is true. Elsa was blown away because Finns, they're not used to just common goodwill where other people just wish, well for them. But I do want to say a massive thank you for that because she was absolutely blown away by it. And also wish you the best and the happiest of this nice Tuesday morning over here in this frigid as fuck, cold, blizzardy Helsinki, Finland. Other than that, I want to keep the analysis a little bit more on something fresh. So we're going to be focusing on the total market cap for all of cryptocurrency today. Obviously for Bitcoin, not really much has changed. In the short term, do I think that we could see another test to the down to the weekly range? Yeah, absolutely, definitely possible. But I still stick with what I've been saying that we're a lot more likely to see the weekly range lows hold and a greater rally to emerge in early 2023 before anything else. It's not a fucking bottom, or it's not like a macro bottom call or anything like that, but a little more likely as we'll go through in today's analysis. These statistics and probabilities do favor that from multiple angles. Other than that, what else? Probably wouldn't be expecting too much between now and 2023, honestly. The last 2 weeks of the year are notoriously boring as all hell. Anyways, without further ado, let's just jump right into it. So starting off with the monthly look over here. And I think that this chart kind of speaks for itself. Despite Bitcoin closing below the 2018 highs, the total market cap actually has not. It is continuing to hold above the 2018 highs. So for a lot of people looking at that as a prior high being broken, an alternative view over here, you can see that still holding and has been tested multiple times. And again, more likely to bounce off of a region like this than not. If we even go down to the weekly time frame, you can see that but total market cap is still holding up above even the June lows coming in from the Terra blow up, and then obviously retested more recently in the FTX blow up. But thus far, has been still holding above these sort of regions on the total market cap. Let me just reference my notes over here. And then yes, a few other things of notes before we move on to the more interesting portion of this analysis, at least in my opinion. And it would be this: the monthly jewel is in the same posturing that we do see the last macro low coming in from March 2019. Now, admittedly, this data, it hasn't had too much history to really populate, but it's the best that we can do. I mean, this is really all that we have going back to 2014 for the total market cap being tracked here. So it's in the same region. Again, coming into January, it's going to have a chance to turn white, which would be a damn good indication that we're very likely to see, again, a bounce out of this region first before anything else. Other than that, I should denote a few other things before we get into the fun part, and that is going to be on this portion of the chart over here on the weekly time frame. And a couple of things. First and foremost, and what's going to be a big focal point of the rest of this analysis, is that volatility is incredibly low. In fact, it is incredibly low on the weekly time frame. And maybe the lowest for the longest in the total market cap's history. Yeah, the only other time that's really comparable to this length would be from February 2016 all the way to May, June of 2016. So a nice large stint like that, similar to what we're experiencing here since basically August. So about the same time frames as well, and also just literally the lowest volatility reads nonetheless. On top of that, we do see that the weekly RSI putting in some drives of bullish evidence come off this current low. And then also the weekly jewel is going to be swinging around for a potential really powerful signal here. It's not quite there just yet. It's still just a potential, but within the next 2 to 4 weeks, I'd say, we're going to have clarity on that situation, whether this starts to turn white or not. If it does, that's going to be the next sort of major brick in this building. If it doesn't, then it's probably all fucked. So fair enough. Yes. Okay, cool. So we've gotten through that. Let's now get into the fun part, and that's going to be over here. We're going to be looking at volatility versus stochastic momentum. Basically, anytime that we have seen volatility on the weekly time frame get down to extreme lows and then expand from those extreme lows, which has happened 7 comparable times in the total market cap's history to what we're looking at right now. The average move on that next expansion has been close to 90% over the course of about an average of like 2 months, basically. And if we were to take a first standard deviation measurement, that would give us a range between about 40% all the way up to almost 140%. And the stochastic oscillator has been correct in getting the direction of the volatility expansion 6 out of 7 times. So that would give it, pretty high hit rate right there. Again, these are very limited iterations. Like I want to at minimum be seeing like 20 to 30, honestly. I mean, realistically like 50. But again, it's the best that we can do given the data that we have at this moment. So why am I bringing this up right now? Well, the weekly stochastic oscillator is currently in it's actually currently potentially going to cross the upside. But the more important thing is that if we do see it cross the upside, which it will, assuming that the total market cap remains above basically the weekly pivot low, which is pretty much where we're at right now, 770 billion or so. Well, that's going to imply that there's a lot higher of a probability to see a much more extended bounce to the upside first before anything else yet again. So when we actually zero in on the data and we play around with the numbers, which I do think that looking for like a nearly 100% bounce is like pretty fucking egregious, let alone 140% bounce, but a 40% bounce on the bottom side of the first standard deviation, I do think is a lot more reasonable and manageable. And if we were to look at numbers over here, 40% would basically put total market cap back around 1 trillion, a nice round even number. And that would probably equate to Bitcoin somewhere around like 20,500 to 21,500 bucks in the next couple months. Now, if we were to go for, closer to the average move, which I guess we could do just to see where would that put Bitcoin, what would that put the total market cap at about 1.4 trillion. Keep that number in the back of your mind's eye. And if we were to even see, the crazy move, which I think is very unrealistic, but we can just see it anyways, 140%, the top side of the first standard deviation. Well, that would put the total market cap basically around 1.75 trillion. So keep those numbers in the back of your mind's eye, because when we go over here to this chart and we plot an inverted fib on this, you can see those numbers pop up around the 0.5, the 6, and the 618, which are not so unheard of in terms of in terms of mean reversion plays. So ultimately, what does this equate to? Well, it equates to a higher probability off of the lows bounce off of the lows first before anything else. Again, this is not a macro bottom call. I'm removing myself from that conversation because honestly, it's so obnoxious. It's like who even gives a fuck where the actual macro low is to begin with, because you can just trade it. But anyways, I understand there's different perspectives, of course. All right, and then more importantly with this, those would be the areas of interest. I suspect. I think the most realistic one would be around 1 trillion, however. And then, of course, what would be an invalidation for this? What would say that this analysis sucks and we're going to fucking Hades in a handbasket? Well, in that case, it's very clear over here. Monthly, weekly pivots are the same thing, basically at around about 770 billion trillion, whatever the fuck. As long as Bitcoin's closing above that number, I do suspect that, again, the probabilities remain in favor of the upside before potential downside continuation, and invalidated, implying major downside continuation with any sort of a closure, again, below that pivot at about, what is it exactly? It's more like 765 billion if you want to be super exact, but ultimately, the same lows that we did see from June, and also the highs that we did see in 2018. So those are the areas to watch. Until then, I think that we're kind of going to be a little bit boring in the short term. Maybe another test of the downside. I think that that's definitely in the cards here. But ultimately, I do think that it will hold, and then we'll very likely see a rally throughout Q1 of 2023. Other than that, I want to take a second to wish you the best as always. Take care, much love, and fuck, I forgot to mention it yet again. We're having a sale on the 1st of January for a week. So if you can, hold off on buying anything in the interim if you're interested in such things, because it'll be a little bit less expensive in just a few days here. All right, cool. That's it. All the best. Take care. Much love, and see you hopefully soon.